Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.
The turnaround stage is set for I-80 Gold, and with the gold price collaborating, the question is, can the company pull it off? Hello and welcome to the 2025 Precious Metals Summit here in Beaver Creek, Colorado with me, Paul Harris. Joining me to discuss this is Ryan Snow, the Chief Financial Officer. Ryan, welcome to Kitco.
Yeah, thank you, Paul. Great to be here.
It's almost a year since the company announced a strategic refocus as it aims to develop 5 gold mines in Nevada capable of producing about 500,000 ounces a year of gold. Since then, the company has issued PEAs, preliminary economic assessments, on 5 projects, and you've just received construction permits and initiated underground development at Archimedes. How is your turnaround plan going?
Yeah, it's going great so far. So what we've really done is focused on 3 stages to our turnaround plan. The first phase has us advancing the Granite Creek underground, bringing that into a steady state production. Second piece of that first phase is to bring the Archimedes underground into production. And like you mentioned, we just got our permits last week and began construction of the portals there to go underground. And then finally, that first phase has us executing on the Autoclave refurbishment plan. Hatch Engineering is doing a study, a Class 3 engineering study, to tell us what it's going to cost and how long it's going to take to refurbish that plant. We expect to publish that in the 4th quarter of this year. We've also started some limited notice to proceed activities around engineering and long lead item procurement for that autoclave refurbishment in anticipation of it being up and running kind of first gold by the end of 2027.
Thank you. With that first phase, where will the company be if that's executed to plan?
Yeah, so that first phase gets us to approximately 200,000 ounces a year of annual production. We expect that to be in the 2028 timeframe that we hit that number. And we're really looking forward to executing on that plan and getting there.
I imagine as the Chief Financial Officer, seeing $3,650 per ounce gold, you're keen to have some of that money coming in. In terms of the Lone Tree Autoclave, I remember a year ago the company was thinking of sort of 2030 to have that in production. It seems you've brought that forward a couple of years. Why was that, and what's enabled that to become the case?
Yeah, great question. Thanks for that. So what we really see, we have a toll milling agreement currently where we're processing the ore from our Granite Creek underground with a third party. At these metals prices today, we're losing approximately $1,000 to $1,300 an ounce in margin by processing through that toll milling agreement. So that's really, precipitated the need to accelerate the autoclave project and get our autoclave up and running so that margin goes into our pocket, and we can use that cash to expand on phase 2 and 3 of our development plan.
I mean, that's quite intensive.
It is, yes.
Okay, in terms of the sort of bigger plan, how critical and how important is the autoclave, and what will that enable the company to do going forward, perhaps even beyond phase 1?
Yeah, so it's key. All of our ore from our underground mines, Granite Creek, Archimedes Underground, and Cove, is refractory in nature. It needs to go through an autoclave. So that autoclave allows us to process our material. It'll do about 2,500 short tons a day. We'll be able to fill that with the 3 undergrounds that we have. And again, it adds to our margin about $1,000 an ounce. Okay.
Where the company sits right now, at what moment of time do you think you will have broken the back on the turnaround?
That's a great question. I think we're getting closer as we develop. I think that 2026 is a catalyst-rich year for us, and I think that there's a lot to do in 2026 that will get us towards that. So let's say the end of 2026 is kind of when I really see that happening. Those catalysts that I mentioned for 2026 are advancing feasibility studies on almost all of our projects. We'll be publishing a feasibility study on the Granite Creek underground in the 1st quarter of next year. We'll have that Class 3 engineering study for the autoclave published at the end of this year. We'll be advancing the Cove feasibility study for the 1st quarter of 2026 as well. So really advancing those technical studies will allow for greater confidence in the resource base. As part of the feasibility studies, we're doing infill drill programs to upgrade the confidence of the resource. So, those will really help in that turnaround phase. And then finally, the recapitalization. Getting the next phase of financing in will really help us advance the development.
Okay, I want to talk about the recapitalization in just a moment. You've been getting some great exploration results, so you're showing that there is more sort of potential there. What for you is the sort of key milestone? Is it the autoclave and getting the engineering done on that and getting that done and dusted?
I'm the CFO, so in my opinion, it's the recapitalization plan. I think if our COO were sitting here talking to you, he'd say, what are the greatest risks to us executing the phase 1 of our development plan? He would say it's me raising the money. So I think that that's really the key. over the next, let's call it 18 months, is to finalize that recapitalization plan and really get, the balance sheet where it needs to be for us to go and develop.
Okay, well, let's talk more about the recapitalization plan. The company earlier said it would seek to raise 400 to 500 million US dollars to restructure existing debt and provide development capital. In May, you raised 173 million US dollars in an upsized bought deal financing. So, ballpark, you've got 200 to 300 million dollars perhaps still to raise. Well, what's the plan there for the rest of that quantum?
Yeah, so great question, and we're looking at it slightly differently today than we were before because of that acceleration of the autoclave that we talked about. So really what we think we need is about $800 million, and that will allow us to complete the development phase 1 and 2 in our development plan. You mentioned the 173 million we raised earlier this year. With that was a warrant. That warrant is in the money, so overall that raise is about $300 million. So that's a good slug of the 800 that we need. We're currently working on a debt component to add to that in the range of $350 to $400 million. We're in discussions with multiple parties on what that might look like. We're kind of in the stage where we're receiving term sheets and trying to evaluate what the best path forward is. So that's where we sit with the debt component to that. So that, again, that's $350 to $400 million. And then we've also got this non-core asset called FAD, which sits adjacent to our Ruby Hill property that we're looking to monetize. We're expecting to start a process on that non-core asset in the next, let's call it 2 or 3 weeks. And we would, hope to receive somewhere in the neighborhood of 50 million cash for that. Then finally, we've got, a potential stream or royalty that we would sell on the Mineral Point project itself. Maybe bring in 50 million or so with that. And finally, we've got restricted cash on the balance sheet related to closure obligations with underwriters. And as we bring these assets into cash flow, we expect to receive some of that cash back off the restricted cash balance sheet.
There's a lot to unpack there, Ryan. With the 350 to 400 million of debt, is that a new package that is that a restructure of the existing debt?
Great question. It's both. So we intend the use of proceeds for that would be to restructure our existing debt, which sits at about $200 million today, and then the balance to help us advance the development plan as we've laid it out.
With the FAD non-core asset, the company hasn't really owned that long. I remember the acquisition that was only, a couple of years ago. What went wrong there? Why is that a non-core asset?
Yeah, I don't think anything went wrong. I think it's really a shift in our priorities. So that FAD asset is a polymetallic asset, zinc, lead, silver with some gold. It's a longer path to cash flow at FAD than it is with our development plan that we've laid out. So we're really focused on the gold assets in the portfolio, and we consider that to be the core, and FAD to be non-core as a result.
Okay. Regarding stream and royalty, will that be over the entire property package, or will that be on specific mines?
It would just be on Mineral Point, which is the third phase in our development plan and really the flagship asset in the portfolio. It's got about 5.5 million ounces of gold and 200 million ounces of silver by itself. So it's a robust project that's further in our timeline, but that's where we'd be looking to add that royalty or stream.
Now, your share price is roughly flat over the past year. Your market capitalization is about, let's say, 700 million US dollars at the moment. Is there any, as part of the recapitalization, is there any intention to raise more equity?
No, we have no intention to raise more equity today. We really think that we can accomplish the recapitalization with the additional debt component that we talked about, the non-core FAD asset sale, and the potential stream or royalty on Mineral Point.
The company ended the June quarter with about 133 million US dollars in cash and 175 million of short and long-term debt. That suggests that you've perhaps got a bit of timeline there before you need to get all the financial aspects in place. You've got a bit of breathing space. So does that enable you to be able to get the financing package you want rather than having to take necessarily what's on offer?
Absolutely. I absolutely believe that. So we've got the first component of that debt package comes due in June 30th of 2026. So we've got until then to kind of work on this financing package. It's the top priority of the team, as you might imagine. So we're working very diligently on this debt component and how we might put that in place between now and June 30th of next year.
Okay, and so is June 30th the sort of the timeline you're working to for the debt and the other aspects of the whole recapitalization package?
I would say yes for the debt. The FAD asset sale might be on the same timeline. It might be a little bit sooner than that, but June 30th is kind of that date we're working towards.
Okay. We're at an investor conference, of course. What response are you getting to the turnaround and your plans and your execution from the investors in the meetings you've had so far?
Yeah, so far so good. I mean, the investors really like the clarity that we've been providing in the development plan with our 3-phase approach. They really like the fact that we are executing on the plan as we've laid it out. We've got some check boxes in our presentation that we've been able to check off over the course of the last 12 months. I mentioned the catalyst-rich 2026. We've got a plethora of check boxes in our presentation that we are going to be checking off over the course of 2026, and walking our investors through what those are and how we plan to do them has been a great conversation so far.
Okay. With the gold price at $3,650 an ounce, what kind of boost will that give you and your balance sheet as you execute on this plan? Yeah,
that gold price is great. We're very happy with the gold price. Today our guidance for this year is between 30 and 40,000 ounces. So, it doesn't have as big an impact as we would hope. But as we ramp up the Granite Creek underground and get phase one kind of completed, and we get to that 200,000 ounce a year number, we really see a lot of benefit to that, coupled with the $1,000 an ounce we talked about by processing through our own autoclave. With how metals prices have changed since we published our PEAs, we were talking about adding, quite a significant amount of margin to our bottom line.
With the completion of the phase one, 200,000 ounce a year of production, will that, in terms of going forward from there, will all the money you generate be reinvested into the business, growing sort of phase two, subsequent phases? At what point will the company perhaps be in a position to start thinking about capital returns, perhaps buying back some of that dilution that you've had to engage in recent years?
Sure. We've got a great growth pipeline at the company, 14 million ounces in resource total in Nevada. So our plan is going to be to develop that pipeline over the balance of all of this decade and into the early 2030s. So I would say for the next 7 years or so, we would be planning on reinvesting all of those proceeds into the company to develop the 3 phases in our development plan that we have and get to eventually 600,000 ounces a year plus of annual production.
Okay. This year has seen several gold developers buying producing assets and getting a significant share price lift because of that. Is that something you anticipate the company benefiting from as Archimedes gets into production?
Yeah, as we get into production and we start to develop, I do think that there's an opportunity for us in that regard to see both a share price bump as a result and to get the gold production that will add margin to the bottom line.
Okay, we've covered a lot of ground during this conversation, Ryan, so maybe let's end by sort of focusing on what are some of the key catalysts over the next 12 to 18 months for people to look out for.
Certainly. So, the first one, which we accomplished last week, was beginning the development underground at Archimedes to allow us to get to production there. So we began that last week. We put out a press release on that. Developing that, it's about 14 months until we touch first ore. So that's what we're looking at there. On top of that, we've got the Autoclave study that's coming out in the Q4, which will give us the cost and schedule estimates for completion of the refurbishment of the Autoclave. We have the feasibility study for Granite Creek, Q1 next year, coming out, which will incorporate updated drill results. We put out a press release this morning, actually, with updated drill results on Granite Creek. So those will be incorporated into this feasibility study that we put out Q1 of next year. Really great results in that press release. We had the furthest hole north and the deepest hole on our South Pacific zone at Granite Creek. We had an intercept of 33.6 grams per ton over 2.9 meters. So really great grade. Really confirms the fact that we're open to the north and the depth of Granite Creek. So great news there. And then at Cove, in our press release this morning, we talked about we've completed a 45,000 meter drill program. We're incorporating those results into an updated geologic model and financial model for a feasibility study that we anticipate coming out in Q1 of next year as well. So, those are real big catalysts for the company over the course of the next 12 months.
Well, we wish you the best of luck with the execution of that. Ryan Snow, thank you very much for joining us today.
Absolutely. Thank you for having me.
And we have a lot more to come for the 2025 Precious Metals Summit here in Beaver Creek in Colorado, so stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.